So what are you talking about whenever you say the word self-directed IRA? Like, what does that mean?
Self-directed IRA simply means that the IRA, and I'm going to preface this by saying retirement plan. So sometimes I'll use IRA, sometimes I'll say retirement plan, and I mean them. You can think of them interchangeably, but basically, what self-direction means is that the plan, the document, gives you the ability to invest in anything that's permissible by law. So most of us are conditioned to think retirement plans, stocks, bonds, bills, marketable securities. The reality is there is a vast array of assets and asset classes and things that you can invest in far beyond stocks and bonds or marketable securities.
How come, a lot of the big banks like Schwab, Fidelity, Vanguard, they don't use the term self-directed?
Well, actually, some of them do, but what they mean by self-direction is that as long as they sell it, you can buy it.
Okay.
Right. So you have to remember, most of the companies that offer IRAs, Roth IRAs, retirement plans of all types, do so as a conduit to bring money in to enhance whatever their core business is. So a bank offers an IRA which allows you to buy CDs in the bank.
Okay.
So their core business is not the IRA. Their core business is lending money. So they are attracting capital vis-a-vis offering CDs so that they can turn around and lend it.
Okay.
Vanguard, Fidelity, Schwab, those companies, they have IRAs and the array of retirement plans, but they're not in the retirement plan business. They're in the business of buying and selling stocks. So their documents basically say, as long as we sell it, you can buy it in the account.
Okay.
So they're using those documents, the retirement plan documents, as a conduit to bring money in to do whatever their core business is.
So in other words, if you want to buy real estate, for example, you can't go to Schwab because they're not in the business of making that transaction of real estate inside an IRA.
Correct. IRAs across all organizations that offer IRAs, the rules are the same. Okay. Contribution limit $7,000. If you're in the over 50 club, you get another $1,000 kicker. Right.
Okay.
Retirement age is 59 and a half. So after that, you can draw money out without penalty in traditional IRAs. At 73 in a traditional IRA, you've got to start to take minimum distributions. All the rules attendant to IRAs are the same. The only two places you're going to see differences in the documents might be in the distributions or the way that money is paid out, or what the plan allows you to invest in.
Okay.
So Schwab's plan will say that you can only buy marketable securities, and you have to buy them through Schwab. So you can't open an IRA at Schwab and invest in or invest through Vanguard, for instance. Self-directed companies, so companies like MidAtlantic, when you look at the investment options, it basically says that you can invest in anything that's permissible by law. A company like MidAtlantic will allow you to invest in real estate, will allow you to lend money, will allow you to invest in a hedge fund, for instance. Those sorts of transactions or those sorts of investments are not available through a Schwab IRA.